Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chainwala from Kotak Securities Commodities Research Desk. And like in every episode, we will be discussing the latest insights into commodity markets, trends affecting commodity markets, and break down the factors that drive prices. So let's dive into this week's highlights. So markets experienced volatility last week influenced by uncertainty surrounding the US elections and ongoing tensions in the Middle East. The dollar surged to a 3-month high of 104.57, marking its fourth consecutive weekly gain, as strong US data has heightened expectations that the Federal Reserve will adopt a cautious approach to monetary easing. This made swap traders less confident about imminent rate cuts this year. On the other hand, US markets closed mixed. The S&P 500 and Dow Jones fell after a 6-week winning streak, while the Nasdaq surged to an all-time high driven by impressive gains from tech giants ahead of their earnings reports. Moving on to the commodities markets, Comex gold reached a record high of $2,772 per ounce, drawing attention as a safe haven amid the tightly contested race between Vice President Kamala Harris and former President Donald Trump. Gold's momentum was also fueled by concerns over the growing US budget deficit and a pullback in US 10-year Treasury yields from its highest since late July. Gold ultimately closed the week 1% higher at $2,760.8 per ounce, while Comex silver briefly surpassed the $35 mark for the first time in 12 years. However, the gains were limited to 2% and prices retreated to below $34 per ounce on closing amid softness in base metals. Technically, MCX Gold December futures on the daily chart is trading inside a flag chart pattern, a break from which will confirm a continuation of the prior bullish momentum. Also, price has sustained above its 20-period simple moving average, affirming positive momentum. Price can test its resistance placed at Rs 79,500, whereas support for the counter is placed at Rs 77,400, below which the major support is placed at Rs 77,000. Moving on to LME. LME Base Metals ended the week mixed as investors are keenly awaiting additional stimulus from China, while a stronger dollar and IMF's downward revision of China's growth forecast capped potential upside. LME Zinc saw significant fluctuations throughout the week before settling with marginal gains, as easing inventory arrivals reduced backwardation from its highest level since September 2022. Earlier in the week, premiums surged to $58 per ton, pushing prices to a 20-month high of $3284 per ton. Moving on to crude oil, WTI crude oil rebounded sharply on Friday, closing the week 3.6% higher, as market participants were on edge due to escalating hostilities between Israel and Iran, which could spark a broader regional conflict. However, oil prices may experience some weakness earlier in this week as concerns about immediate supply disruptions eased, particularly following Israel's strike on Iran during the weekend, which targeted military assets rather than oil infrastructure, showing signals of restrained attack. However, prices may remain cushioned as ceasefire talks resumed on Sunday with US, Egyptian and Qatari mediators proposing an extendable truce and a hostage swap, though no permanent ceasefire has been mentioned. Technically, MCX crude oil November has given an upward breakout of its downward sloping trend line and has also closed above its 50-period simple moving average. Price can test its resistance placed at Rs 6350, whereas support for the counter is placed at Rs 5700, below which major support is placed at Rs 5550. Now looking ahead, traders are likely to remain cautious as they await the September core PCE report and labour market reports, the last key data points ahead of the Fed's policy decision on November 8th. US and Chinese PMI numbers will also be closely watched. On the policy front, the Bank of Japan is expected to maintain status quo, with Governor Kazuo Ueda recently signaling that interest rates will not be raised in the next week. Now, with the US economy projected to grow by 3% for a second consecutive quarter, this may reinforce the Federal Reserve's cautious approach, reducing the urgency for the aggressive rate cuts. On the other hand, if inflation indicators suggest persistent price pressures, the Fed could face pressure calls for urgent policy action. A weaker jobs report is expected due to the effects of hurricane and strikes at Boeing, following a significant increase in September. Overall, investors should prepare for ongoing volatility driven by pivotal market developments in the coming weeks. So we are actually looking forward to a data heavy and event heavy week. And so we expect the market volatility to persist as traders brace for key US data and election jitters. That concludes this edition of the Commodity Audiocast, and we hope you found our insights valuable. Thank you so much for tuning in today, and we look forward to having you with us again next week. So as we won't be meeting before Diwali, I would like to wish you all a very happy Diwali in advance. आप सभी को दिवाली की ढेर ढेर शुभकामनाएं. Also, happy trading. Thank you so much.